Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning, hello and welcome to Bazaar Morning Call. We're coming to you as always live from the CNBC TV 18 Motilal Oswal studios. I'm Surabhi Upadhyay, with me is Nigel D'Souza, and today we have Mangalam in the house to wrap up what's actually been a great week for the markets.
Well, indeed, but besides it being a Friday, besides it being a start of a new series, it's a very special day here in the studio because our very dear Surabhi's birthday. So, Surabhi, happy birthday. Wishing you a good day. Fantastic year ahead, and it's been great working with you. You've been, real support both on and off field. So, wishing you all the best and a crackers coming up this year.
Thank you so much, Nigel. All heart when Nigel's there, whether it's in the studio or in the newsroom or outside, it's all heart. Thank you so much.
Wish you a very, very happy birthday.
Thank you,
what's interesting is that today is also a very auspicious day. It is the Jagannath Rath Yatra,
I didn't know today
which
is the Rath Yatra.
actually is a very auspicious day in large parts of the country. And I'll give you an incredible piece of trivia. If you looked at the Nifty over the last 4 months, the way it moved, the one English word that comes to your mind is juggernaut. Why is that?
Yes.
Because through Operation Sindoor, through Iran-Israel, through Trump trade tariffs, everything, we managed to go ahead and gain.
Oh, yes.
And the English word juggernaut actually is derived from Jagannath, which basically means a force to reckon with. The last 4 months have been fraught with a lot of uncertainty globally and locally. Let's hope this auspicious time that there is, the next 4 months are incredible, not just for you, but for the entire country and the world.
Absolutely. I didn't know that. That's great trivia. I didn't know Juggernaut was derived from Jagannath, Lord Jagannath. Wow, that's fantastic trivia. Thank you so much, guys. And actually, it's a good feeling. It's a good feeling to have the market also be where it is, because we've come a long way. It's been a hard couple of months, but the bulls have managed to prevail. And that's the story this Friday morning as well, as we look at the global cues. So what do we have? We have the fact that there is obviously the geopolitical risk premium that's completely gone. So that issue seems to be at least absolutely in the rear window, almost over and done from a market perspective, at least for the time being. And it's not just here in India, but global markets, US markets are almost at the doorsteps of blue sky territory. You had the 3 indices rally last night, almost 1% each, and all of them are just a smidge away, a couple of points away from hitting those fresh all-time highs. The S&P 500 is, just not even 0.5%, less than that, away from the all-time highs. So one, you have the geopolitical risk fading into the background, and the second big booster shot has come in yesterday in the form of the possibility of this July 9 tariff deadline being pushed back. Now, where is this coming from? We don't have a tweet, we don't have a post from the US president, but we do have comments coming in from the White House press secretary. And I actually want to quote exactly what she said, because this is extremely important. This is Caroline Leavitt, and she was speaking to reporters at the White House yesterday, and she says the July 9 deadline for restarting tariffs on nations are not critical. So she's saying these exact dates are not critical. Perhaps it could be extended, but that's a decision for the president to make, end of quote. So that's the statement that's come in. It's only adding to the risk appetite. Equities are higher. On the bonds and the money market side, the dollar side, there's something very interesting going on over there. That's the quote. That's what she said. And obviously, markets are taking it with both hands. And markets had started pricing this in perhaps already. The fact that July 9 may not be the end of the world kind of a day. These are negotiations. Maybe they go on for a while longer, so the market can continue doing its thing. Now, let's quickly talk about the yields and the dollar. On the yields, we had a move down yesterday because the bond market is now dealing with the prospects of what happens, Fed continuity. Is Jerome Powell going to continue his term or not? He's supposed to last till May next year, but let's see. So the 10-year yield actually fell 5 basis points. There was some element of risk in the bond market. The dollar has been falling consistently. The dollar index is at over 3-year lows. The dollar is at a 3.5-year low versus the euro. In fact, yesterday, during the intraday US trading action, the dollar index had slipped below 97. So let's watch for this. Today is an important data point from the US in the form of inflation, and this is the Fed's preferred gauge, the PCE index. That will come out today. The expectation is that it should be almost flat month on month and up 2.3% year on year. So this is important from the macro point of view. For us, it's been a fantastic week. The Nifty has managed to punch through that trading range after a long, long time. Yesterday, we had more follow-through come in. And look at the kind of buying from FPIs. Explains why large caps were on fire yesterday. Yes, you can argue it was skewed by blocks like PB Fintech, etc. But even X of that, it's a huge number. You cannot sort of write this off or, wish it away. So solid news over there. I'll just end with the distance from the peak for the Nifty. Just 2.8% from the all-time high. That's the Nifty. And the mid-cap index is just about 2.5% away, 2.7% away from the all-time highs as well. So it's a feel-good Friday for sure.
Well, indeed.
It is a feel-good Friday. So let's listen in to what US President Donald Trump said. He could extend the upcoming deadlines for reimposing high tariffs on imports from other countries. Listen into the White House press secretary's comment that Surbi alluded to. We hear that out and set up the market once again.
The deadline is not critical. The president can simply provide these countries with a deal if they refuse to make us one by the deadline. And that means the president can pick a reciprocal tariff rate that he believes is advantageous for the United States and for the American worker. And he will continue to do that.
All right, tariff or no tariff, the uncertainty continues. But what is certain is that the juggernaut of the market continues to move on. We look at the last 4 series. The Nifty is actually, added almost 3,000 points in just the last 4 series. March 2025, we had about 1,000 points. Thereafter, April, we followed up with around 655 points, 600 points in May. And June, what a beautiful series it's been, 700 points through all of the uncertainty that we've seen around trade and geopolitical uncertainty that we have seen. The last time Nifty gained more than 4 series was way back in May 2017. Every time we've had 4 series rallies in the last 6-7 years, we've actually seen a puncher in the series after that. The last time it was June to September. Thereafter, we saw some selling come by towards late September, start of October. Nifty hasn't gained for more than 4 series since May 2017. Can this break this time around? Well, July series, Nigel will talk about that quantitatively in detail shortly. But in the last 10 years, July has been negative just twice. So one of the streaks breaks this time. Nifty either makes 5 straight series or July turns negative. But it's a very good trade setup. Wall Street has seen a good close. Asian markets have opened fairly well. GIFT Nifty has indicated a start of almost 100 points in the green. Nifty broke above important levels yesterday as well. So now all you do is back calculate the distance to the top. The Nifty Bank hit a fresh record high yesterday. Absolutely, phenomenal move that we've seen. The Nifty is just about 2.8% away. So now the onus is on Nifty IT and Reliance to take the Nifty higher because both those indices are still 7 and 15% away from their 52-week high. What are the key triggers that we're tracking for July series? Don't lose sight. We're very close to the result season. So quarterly updates and Q1 result season comes by. Geopolitical developments. While the street is abating that, we're still not out of the woods yet there. That's something we'll be watching out for. The FIs have pumped in some money. Does more of that continue or not is something I'll watch out for, specifically with regards to what happens with the emerging markets and Korea being classified as a developed market, etc., whether that happens or not. And July 9th, you have tariff-related news and developments. The line is in the sand and not, very strong. So around that development is something we'll be watching out for. But Nigel, good start to July series.
Well, that's right. The June series ended with a flourish. And now all eyes are on July, whether or not we can get back to those fresh all-time highs. And the momentum seems to be with the bulls as well, because you have all the constituents of the markets that are firing, whether it's Reliance Industries, Bharti Airtel, the Nifty Bank. All of them seem to be moving with a lot of momentum. And if you take a look at what history suggests, well, July is normally a good series. The last 10 series of July, the probability is that the Nifty, well, last 10 times, 90% of the times the Nifty has ended in the green, and 70% of the times the Nifty Bank has ended in the green, and the returns have been 2.5 to around 3.5% or thereabouts. So if that is the case, then all-time highs should be here in the month of July. However, there are 2 big cues that we are looking at. One is with regard to the tariffs. The deadline approaches in the next few sessions, and that's going to be the key monitorable on the global front. Besides that, on the domestic front, the earnings season is going to be important. Expectations are not very, very high, which actually is a good thing because that's what happened in the 4th quarter of FY25 as well. And actually, the street was pleasantly surprised on that front. Let's focus on positioning then. If you're looking at the Nifty open interest, the Nifty futures open interest, it's relatively heavier than what we have seen in the previous few series. So that's one data point to clutch onto. What about positioning? How are the FIs as well as the clients positioned at the start of a new series? Well, the FIs, they are net short. The clients are net long. But if you look at the stock futures, both of them are as long as they were in the previous series as well. But let's delve a little bit more into the index futures, particularly for the FIs. So the FIs, yes, they're net short with 35,000 contracts on the short side. However, the previous series, they were even more net short. And actually, I prefer when the FIs are net short because that gives you a reason for them to cover. Remember, in the last series, so majority of it, their net short contracts were around 90,000 to around 1 lakh odd. So I think we'll be missing those FI shorts a little bit this time around. What about clients? Well, they are net long. But they are net long positions as well, not as much as it was in the previous series itself. So that's how the FIs as well as the clients are positioned. If you're looking at levels, well, on the upside, anything is possible now because we have taken out crucial levels in terms of resistance. So for the Nifty, that 25,200 mark was a bit of a resistance mark. That's got taken out. So that becomes your first reference point. But otherwise, the 20 DMA is very, very important. You'll have to back yourself and say, till the Nifty Bank hold on to this 20 DMA, then maybe, in fact, we're in for better times. However, besides the Nifty and the Nifty Bank, I'm looking at two indices. The first one should be the metal index. Well, that's going to be important because it's at that golden cross. What is that? That, in fact, is, when the 50 and the 200 DMA, well, the 50 DMA actually overtakes the 200 DMA. And in the last 1 year or so, actually, have made no money in the metal index. So given the kind of cues we have on the global front, and things are looking a little bit better, I'll keep an eye out on the metal index. Anuj, my colleague, in fact, from CNBC Awaaz, had told me as well yesterday. And I will watch out for this because that 50 DMA is overtaking the 200 DMA. So I'll keep an eye out on this. The other one is the tech index. Since everything seems to be moving well, the tech index is still 15% away from its all-time high. So I'll keep an eye out on this one. Is there a bit of catch-up due on this one? So let's see. But I think, guys, we're set up well for July series actually to be a good one.
Okay, looking good for July then. All right, folks, so let's then kick it off with the equity call of the morning. And this one's coming in from Rhythm Desai of Morgan Stanley. He expects the growth data to improve, the RBI to remain dovish, and an earnings beat in the upcoming earnings season. He says most crucial cues continue to be global, including tariffs and wars. He adds a global recession or near recession would challenge Morgan Stanley's bullish call and keep equities off the highs. But that's not their base case. They are fairly bullish going into the second half.